VingeGPT.com.
Welcome back, investors. Welcome to a new video on our YouTube channel. This time we will be speaking about L'Oreal Group that you may know. And L'Oreal Group is in fact the world's largest cosmetics company. You see here on the first page of their latest annual report, Zendaya, so the famous Hollywood star, on their cover page. As always, do not forget to subscribe to our YouTube channel so that you get notifications when we publish once per week a new video, as we have more than 10 companies that are now lined up actually over the next couple of months where we're going to be doing an analysis of those companies. Also, feel free to suggest companies that you would be interested that we analyze, and we use Vinge also for doing a fundamental analysis and intrinsic valuation of those companies. So feel free to put them in the comment section of this video. So in terms of generative AI, as always, you know that I like to share the prompts that I'm using with Midjourney. So you're going to see those two pictures, and those are the prompts on the right-hand side. I mean, for those who have Midjourney, you can play with that, but at least I'm sharing with you how I prompt Midjourney in order to create those generative AI pictures that, in my opinion, look, I mean, pretty good, in fact. So also in terms of introduction, I have to disclaim that I'm not a shareholder of L'Oreal. I'm a shareholder of Nestle, which owns 20%. I will cover that later on. And of course, do not forget that investing to the stock market comes with a certain amount of risk. And that's the reason why we are doing those videos. That's the reason why we are providing trainings on Udemy on how to invest into the stock market. And also we have created Vinge just to reduce the risk, first of all, for us, because we are using Vinge also in order to, when we do our own investments or part of our investment journey. So in terms of chapters, so we have divided this video into 3 parts. The first one, I'm going to give an introduction about the company. Then we're going to look at the company financials. And then we're going to do a valuation of the company and comparing it with the current share price. So in terms of company, as I already mentioned earlier, so L'Oreal is actually the world's largest cosmetics company. And so they are headquartered in France. I mean, their origin is coming out of France. They have been founded early 20th century, 1909. They started with hair coloring. That was the first product that they started to sell. And in 1963, they became listed on the Paris Stock Exchange. If we reborn a little bit the history of L'Oreal, you see here some famous brands that have been added in a lot of cases through acquisitions into the portfolio, the brand portfolio of the company. So you may recognize some very well-known brands as Lancôme, for example, or Laboratoire Garnier, Biotherm, La Roche-Posay, which is also very well-known, Maybelline, New York as well, The Body Shop, Yves Saint Laurent Beauté, and also the fragrances like Thierry Mugler and Azzaro. When we look at L'Oreal Group, we're going to see the financial figures later on, so I don't want to spend too much time here now going into the financials, but basically the L'Oreal Group has 4 very big divisions, which range from professional products, consumer products, luxury beauty, and also dermatological beauty, which is close to pharma, kind of. And in terms of brands, I mean, the strongest brand is L'Oreal itself. So it's the #1 beauty brand in the world. I mean, some people may know, specifically women will probably know Maybelline New York. That's the #1 makeup brand in the world as well, which is part of L'Oreal Group. Lancôme, that's luxury beauty, so pretty expensive products. So they are #2 worldwide, and they're actually #1 brand in China in that category. Kerastase, I mean, that's probably even for some men will resonate. So that's about hair care, and you have, I mean, you will find in a lot of grocery stores and malls, you may find those products as well, like shampoos of Kerastase, and it's actually the #1 professional hair care brand in the world. And Redken, which I do not know, to be very fair, apparently is #1 in the United States. They have some other brands where they have licenses, like Yves Saint Laurent, for example, and Valentino, just to name a couple of those. So in terms of when we speak about brands, of course, and for those who follow me since many years, you know that I like to invest into companies, first of all, that are undervalued, so where the market is very emotional about it, and that pay out a reasonable amount of cash in terms of cash dividends. But also I like to invest, if possible, into brands that are part of the top 100 in the world. And for that, I mean, for those who know me, you know that I'm looking at the Interbrands annual ranking. So the next one, by the way, we end of September. The next one is coming out in, I think, coming like 5 to 6 weeks, the 2024 top 100 will be published. So here we use Vinge because we have trained Vinge on everything that is related to brand valuation. And so you see here the prompts also that we are using. So we have asked Vinge, do we have any brand related information? And also, can you show me actually how the brand of L'Oreal has evolved over the last 10 years, in fact. And so you see here the prompt. So the first result on the prompt is actually, yes, L'Oreal is part of the top 100. So they are currently, so in the 2023 ranking, they are positioned on, so ranked number 57 with a brand valuation of a little bit more than 13.5 billion US dollars. And so on the second prompt, you see here the results with the screenshot. You see that actually on the brand position, that's the red line. You see that actually the brand position has been declining. So they were like, let's say, close to the top 40, and now they are rough cut still in the middles of the, so let's say in the top 60, so middle 55 to 60 in fact. So there was a little bit of, let's say, brand power according to Interbrand. What is nonetheless interesting on this graph, that's the blue line. You see that the brand valuation, so how the intangible assets, so that's basically the brands that they carry, that they own. So Interbrand is saying that basically that the brand valuation, also the fair value of those intangible assets in the balance sheet has grown from rough cut 10 billion to a little bit more than, what was it, 13.6 billion US dollars over the last 10 years. So the balance sheet from an intangible asset perspective has become stronger, but the brand itself, L'Oreal, has been declining a little bit nonetheless. This is what the red graph is showing us here. In terms of shareholdership, that's also very interesting. So some of you may know Liliane Bettencourt. So this lady has in the meantime passed away, but she was actually the main shareholder of L'Oreal Group. So it's kind of a family-owned group, even though they're listed on the stock exchange. And when you look at the financial report, you're going to see that actually the Bettencourt family, so now it's Françoise Bettencourt-Myers, who is, I think, the daughter of Liliane Bettencourt. So together with her family, they own a little bit more than a third of L'Oreal Group, which of course makes them extremely wealthy. And also very interesting for the Nestle shareholders in the room. I'm a Nestle shareholder, I have to disclose that. Well, Nestle has a big stake in L'Oreal, and according to the latest 2023 financial information, they do own a bit more than 20%, which gives them, this is what you see on the bullet point number 2, which gives them actually 2 positions in the board of directors of L'Oreal Group. So they're representing the strong ownership of Nestle in L'Oreal Group. In terms of growth drivers, so one of the things, and you see this will come back after when we're going to do the valuation of the company. So in terms of growth drivers, when you read the financial report of L'Oreal and what they're presenting to investors, they claim that the 4, and I try to summarize here, the 4 growth drivers that they have in terms of revenue will be e-commerce moving forward. So e-commerce has actually grown a lot, so like 5 to 6 times over the last rough cut decades. And now e-commerce contributes to 27% of the overall sales of L'Oreal Group. One thing as well that was less present even 10, 20 years ago is, of course, social media. And of course, we're going to speak about TikTok and Instagram. And according to L'Oreal Group, they have done, let's say, marketing analysis that beauty is the #1 category online, specifically on social media like TikTok, for example. So this, of course, is driving demand for the products of L'Oreal Group. Then if you look at geographical or market growth, so according to the financial report of L'Oreal, they consider that they have still a low market share in some cities in China, specifically what they call tier 2 and tier 3, tier 4, tier 5 cities. So a tier 1 city would be like Shanghai and Beijing. And then I don't know if Shenzhen would be part of it, but I mean, you have in terms of size of cities in China, a lot of cities that are considered like tier 2 to tier 5, where the current penetration of L'Oreal is pretty low. So they consider that there is an opportunity for growth that will contribute to the top line and the bottom line of the company. And then also, and for those who follow me, you know that I believe that the market is speaking not a lot about India and the demographic growth that will happen in India. And it's interesting to see that L'Oreal, they are clearly considering that India and Indonesia will add a lot. So they claim 250 million potential customers by 2030 to their top line and bottom line. So that's pretty interesting to see a little bit what are the growth drivers. Another growth driver, and maybe it's also how they try to orient the company and to define themselves, is that they are adding this beauty tech conversation to the company. So they consider that technology is the future of beauty through inventions and innovations like AI, robotics, IoT, which gives connectivity to devices, nanotechnology, biotechnology. And so if I would give two examples of beauty tech, the first one is providing, in fact, personalized recommendations to consumers. I mean, the personalization of recommendation is the same what you have on personalized education, personalized advertising, personalized content. And it's the same for beauty. So L'Oreal is kind of betting that thanks to technology, and they are apparently investing a lot into technology, that they will be able to provide personalized recommendations to their customers, to their consumers, in fact. The second thing is they are trying to create cutting-edge devices and tools, so beauty devices and beauty tools. One example that I wanted to call out is this AirLight Pro, and for those who know the brand Dyson, this is a clear competitor against Dyson as well. So this is a hairdryer, and so they have partnered with I think it's a Chinese company called Zuvi, where they have created, and I think they even won an award at the CES in Las Vegas Consumer Conference. So a combination of infrared technology and winds and energy saving. So that's the type of invention that they're trying to bring to the market. So this has been announced for 2024. I did not find it right now, so to buy this AirLight Pro, but I have seen articles where they were claiming that, because I wanted to compare with the Dyson. The Dyson is pretty expensive as well as a hairdryer. And so they claim, so some journalists claim that the price tag will be around or just below $400 US, in fact, for this cutting edge beauty device, so in the sense of this hairdryer. Right. So I hope this is giving you some kind of a first perspective on what L'Oreal Group is actually doing. Let's look a little bit at the financials of the company. So when you look at the overall revenue, so in 2023, the total revenues were a little bit more than 41 billion euros, and they have been growing by 7.6%, in fact. And in the first half of 2024, so remember, being a French headquartered company, we don't have 10Q reports like in the US, where every quarter we have financial statements that are being, so those financial statements are unaudited, but still. So for European companies, you get a sales update, but only after the first semester, you get actually some kind of unaudited report with more precise balance sheets, income statements, and cash flow statements. So for the first 6 months of 2024, they generated 22 billion euros of revenue. So again, growing 7.5% compared to the first half of 2023. And if you look at the geographical spread or the origins from where the revenues are coming, you see that Europe is pretty strong, and actually it's pretty well balanced between three, let's say, regions. So Europe is 31%, North America is 27%, North Asia is 25%, and then you have like everything that is Middle East and South, let's say East Asia, and Latin America, which is, I mean, there is a certain portion of revenues, but they are nonetheless small compared to the other big three regions. So MENA and SSA, as they call it, is just 8.4%, and Latin America is just 7.1%. When you look also here, so I mean, we wouldn't have the time to go into all financial details. I mean, for that, read the financial report. I'm just trying to make a summary here. When you look at, remember the 4 divisions I was showing earlier: professional products, consumer products, luxury beauty, and dermatological beauty. You see actually that dermatological beauty is the one that is growing fastest, and luxury beauty has been the one that has been having the slowest growth with 4% only. So that's bullet point number 1. So it's pretty interesting to see. And in terms of regions, what is interesting, and at the same time, I mean, if you follow the market, you know that a lot of people are stressed about Asia having a slowdown, economic slowdown. And this is actually reflected in the first semester of 2024, where you see in the second bullet point here, you see that North Asia has been decreasing by minus 3.1%, while Latin America and so Middle East and Southeast Asia have been driving the growth, including Europe as well, with 12.2%. So, I mean, you have double-digit growth in Europe, in Middle East, Southeast Asia and Latin America. But you see that North Asia, which includes China, the growth actually, there has been no growth. It has been actually declining, which confirms kind of what you would read also from Mercedes saying, so the CEO claiming last week that, I mean, they are selling less vehicles in China as well because there is an economic slowdown. But there has been a stimulus, and you have seen that the markets have reacted very positively over the last 3 days and gaining something like plus 15% in just 3 days of stock market. So then, if we look at the financials, of course, something that we are interested in is to look at so revenue, net income, and dividend per share over a longer period of time. So here you see on the right-hand side in the video, so we are using Vinge. Remember that I'm always using the pre-production environment because I don't want to have our statistics, because we're analyzing, of course, how many users and how many people are using Vinge in the production environment. So this is the pre-production environment. It's like our demo environment, but it's basically a copy-paste of what if you would go on Vinge GPT on the OpenAI store. So I've been asking here Vinge to create a graph and to analyze for the period 2020 to September 2024. So the revenue, the net income, and the dividend per share on the same graph. And I asked Vinge actually to put the dividend per share on the second axis of the graph. That's why it took a little bit longer. So you may have seen, if you go back to the video, that it actually received from our Vinge backend very quickly the information, but then so Vinge GPT had to analyze and to create the graph. So I had to make the interpretation of the prompt. And now you see here the results. So between 2020 and 2024, so the latest available figures. So you have in the blue line, you have the revenue. So that's the left axis. You have the green line, the net income. So you clearly see that revenues have been growing and net income, so profitability of the company has been growing. And dividends per share have been growing as well. So, and I asked also, by the way, I forgot to mention that, I asked Vinge as well to calculate the compound annual growth rate for the 3 metrics. And you see that they have, if it is on revenue, net income, and dividend per share, that the compound annual growth rate for the last 4 or 5 years is a rough cut 15% for the 3 metrics. So that's the first interesting thing. Let's keep this in mind, this 15%, when we're going to do the valuation. You're going to see I will not use 15% for doing the intrinsic valuation, but nonetheless keep this in mind versus using the default values of Vinge, in fact. So let's look now at the share price. So we have seen that so revenues have been growing, net income has been growing, and dividend per share has been growing. So let's look at the share price. So the share price, if you look at the graph, over the last couple of years, so you see that the share price had reached a peak, rough cut early 2024 with around $506. So I'm using here so the data from our data broker as well. So the peak was at $506. In euros, probably would have been something that I do not know, multiplied by 0.9 to have an equivalent, so probably 450 euros per share. And you see that it came down a little bit because of the market being emotional about what is going on in China and high inflation and a potential recession, blah, blah, blah. And you see that now over the last couple of days, the share went up again. So this is the closing of last Friday, Wall Street closing. So the share has been let's say valued at $449.18 per share on the New York Stock Exchange. And so here what we are asking, so you see that we are just continuing prompting Vinge. So first of all, I would like actually Vinge to do a fundamental analysis of the company. So looking at the fundamental ratios of the company, the dividend yield. So here you get the results. You see that I was prompting Vinge. So let me just pause the video here 1 second. So you see that the share price is the same that I was showing you on the TradingView platform. You see that the price to earnings and price to cash flow is at rough cut 35, so between 34 and 36. I'm gonna ask afterwards Vinge specifically to assess those values. You see already here the dividend yield at 157%, the payout ratio, the ROIC pretty high. And let's just let's leave the floor to Vinge to do us the analysis. So here you see that it does the evaluation from a value investing perspective. And let me just stop here 1 second, the video again. Let's pause it here. You see that it says from the valuation that it considers, because of course we have trained Vinge, that it considers that the PE being at 34, it's a little bit high. So it feels just on that ratio a little bit overvalued, Profitability is very good of the company. So return on assets 12%, return on invested capital close to 19%. That's very, very good. You know that I like to invest into companies above 8 to 10%. Dividends is a little bit on the lower side. Actually, for me, too low at 1.57%. But the dividend payout ratio is sustainable with only 54% of the profit being allocated to the shareholders, in fact, under the form of cash dividends. So for sure, I do not expect the dividend to go down. In terms of debt, I mean, the debt to equity is super low. The cash to debt is pretty good. And also the economic mode. So L'Oreal, of course, is considered as having a white mode. They are the largest cosmetics company in the world. Then let's go into the intrinsic valuation of the company. So we are asking Vinge, what's the cost of capital for the company? So you know, I mean, for those who have been using Vinge will go into the industry cluster that L'Oreal is part of, which is, I don't remember if there is a beauty kind of cluster. I don't remember the name. Let's see at the, so it's household and personal products. So L'Oreal is categorized on the household and personal products. And so the cost of capital, according to Aswad Damodaran, January 2024, for that cluster is 8.99%. And you know that Vinge per default, let me just pause here the video, that Vinge per default, if I would not specify, or you would not specify the cost of capital, will use 7% in terms of cost of capital, 3% growth rate, and 30% year valuation. You may know that we don't use a terminal value, so we're a little bit more defensive on that. So here what I ask, and coming back to what we saw earlier, you may remember that Vinge was showing a compound annual growth rate over the last 4 years of rough cut 15%. If it was on revenue, it was on dividends, if it was on net income, so profitability. So I felt that maybe 15% is a little bit high. So I asked Vinge, okay, instead of using the 3% default value on growth, use me 7% growth rate for the next 30 years and apply the 8.99% cost of capital. And you see here, and I'm going to show you in the conclusion a summary slide of the valuation, but you see here how Vinge is actually then calculating the dividend discount model. Of course, this one is very low because the company is not paying out a lot of dividends. But the ones that are interesting here is discounted cash flow and discounted future earnings with those assumptions. So you see that the intrinsic values are in fact below the current market share price, of course, with those assumptions. And one thing I wanted as well is to assess specifically the PE. So I'm just showing you here how you can assess or ask Vinge to go a little bit deeper into the analysis of the price to earnings ratio and the price to cash flow, which was part of the level 1 analysis, the fundamental analysis. But here you see, of course, Vinge understands what I'm asking, and it gives a specific analysis, specific assessment on the price to earnings, on the price to free cash flow, in fact. And you see it's the same numbers that we had before when we were doing the fundamental level 1 analysis. And then what I'm asking as well is, can you compare those ratios? And I could have done a more complex prompt. I'm just asking, in fact, to compare the two ratios, PE and price to free cash flow, with the competitors, without mentioning the competitors. And remember that Vinge knows the competitors for all of the companies in the investment universe. And in fact, in the household and consumer products cluster that we had, so that L'Oreal is part of, we have in fact as competitors Procter & Gamble and Unilever. And here you see in fact that L'Oreal has the highest price to earnings and highest price to free cash flow, which probably means that investors have high expectations on growth and profitability for the future on L'Oreal, and they're a little bit more defensive on Procter and Unilever. And again, Procter and Unilever, it's true that maybe they are not in this, for some products, they are not in the same category of luxury beauty, for example, or dermatological beauty. So, I mean, Procter and Unilever, if I remember, don't have that, but they are in beauty nonetheless as well. So just to show you how you can use Vinge for the evaluation, but you see that PE and so price to free cash flow is a little bit high. Then I'm asking as well, Vinge, we already looked at the brand's valuation before, remember, positioned 57th in the world. I'm asking Vinge as well to perform a level 3 analysis. So I'm interested, so Vinge knows on the level 3 analysis, I mean, for those who did the other value investing training, you know what is being asked. We are looking at net promoter score. We are looking at employee net promoter score as well. Let me just go back here 1 second. So, and here there is a surprise. If you look at my, I hope that you're going to see the mouse here. on the video. What I was surprised, in fact, is to see that the Net Promoter Score is of -16 actually, and that's for the brand L'Oreal. I mean, if people would love the brand, the NPS score would be positive. That was that was a surprise for me. I was expecting actually that L'Oreal would have a very high Net Promoter Score. By the way, without, I would say, going now into the details, but I asked my wife as well, what is her perspective on L'Oreal in terms of brand. And she also was not super positive about the brand in terms of content, so product content, in terms of, I would say, health and safety from so the chemical components in some of the products. Because I remember she has a specific app where she can scan the product and it gives you some kind of rating. I don't remember the name of the app, but it gives a rating between 0 and 20. And she actually mentioned to me immediately when I asked her earlier today about L'Oreal that, well, a lot of the, let's say, the products of L'Oreal, they don't score very well in terms of chemical, let's say, content. So, and I kind of correlated with her perspective and maybe with the NPS, because again, if I take her as an example, and again, she's not a representative sample, but just asking her, she was not super positive about the brand. With all due respect, if L'Oreal people are listening to this video, but and the NPS, so this is something that we take also from the internet, the NPS is surprisingly negative. So there is something here that maybe consumers are not as happy as we would expect, in fact, on the world's largest cosmetics group. Employees, nonetheless, are very, very in favor of the company with an eNPS score of 43. The CEO approval, so Nicolas Hieronymus, he's now the CEO. He has taken over from, what was the name? Jean-Louis Agon. I think he's now the chairman of the group since a couple of years. So the CEO approval is very high. Recommendation to a friend is very high. Customer loyalty and also the positive business outlook. So employees feel positive about the company's business outlook. So that's pretty, let's say, positive nonetheless for the company. The only surprise was actually the Net Promoter Score, in fact. Now, if we put the whole story together, this is a new type of graph that I tried to make it a little bit more, let's say, attractive and more easy to read, where I look at the valuation that we received from Vinge, and I look at the valuation also that Morningstar is providing for the same ticker. So basically, remember, for those who did the course, that depending on the share price, so the share price is currently at 449, that you may be either in an overvaluation scenario, in a fair valuation scenario, or in an undervaluation. So Morningstar actually considers that currently at $449 that the company is fairly valued. That's what they consider. Vinge actually, of course, with the assumptions that we have used, so 7% growth and 8.99% cost of capital. If you change that, of course, the fair valuation of Vinge will change. But they consider that the intrinsic value on discounted cash and discounted future earnings, we leave dividends aside because the dividends are just too low to use this as a reasonable measure of intrinsic value. But they actually, so Vinge is mentioning with those two assumptions, 7%, 8.99%, that the fair valuation zone is somewhere between, let's say, $280 and $300 a share. Of course, when we want to buy a company, we want to buy the company 25% below intrinsic value, which would bring us somewhere to below $225 a share. With those assumptions, again, if you're changing those assumptions, the range of evaluation will change, of course, as well. Remember, it's not a critic towards Morningstar, but Morningstar doesn't explain how they do the valuation of the company. You have no clue about the growth assumption and the lower and the cost of capital. I'm expecting that their growth assumptions are higher than the one that I have been using, which has been 7%. And maybe they have used a lower cost of capital than the cost of capital that Aswan Damodaran has published for this specific cluster, industry cluster, in January 2024. So Morningstar is actually considering that the fair valuation zone is between $364 and $463. So but you see that they claim that at 463 is a one-star price. The stock being at 448 is just like $15 before reaching the limit of being very expensive. So, okay, this is what we have to consider. I believe, and this will be actually part of my conclusion, I believe that the company is interesting. I was just surprised by the negative NPS. That was really a surprise for me because as I'm not a L'Oreal shareholder, I did not look into the company lately. So I still believe that the company has very strong brands. I do believe that they are not too wrong on the growth assumptions, specifically for India and Indonesia. I believe also there is potential still for them growing e-commerce, and this is what they're saying, where they don't have let's say physical distributors. So they're gonna grow market share if it is in Africa, but also in Latin America. What is for me very clear is that if you would use the default values of Vinge, which come with 3% growth rate, that's for me like being too defensive. I did not put 15%. I felt that for the next 3 years, that's maybe a little bit too much. I felt that 7% is maybe something reasonable. So in terms of passive income, it's pretty low. Let's be very fair about it. So I believe that if you would buy L'Oreal, so my first comment is I believe that L'Oreal is too expensive, at least for me to buy. And I would not be rewarded for my patience through passive incomes like cash dividends. So I would only have to hope that I would gain money on L'Oreal at a certain time through capital gain. So the share price still growing. And so, as I already said, I believe, honestly, at least for me, you do whatever you want, that's your money, but at least for me, I consider that even though I like L'Oreal in terms of company, nonetheless a negative surprise on the NPS, but still I believe that the company is currently overvalued. So that would be for me clearly not a recommendation. I would not recommend myself to buy the company, if I can summarize it like this. So that's basically it. Thanks for your attention. Hope that you like this video again. Again, do not forget to subscribe to our YouTube channel. And as already said in the introduction, feel free to suggest companies that you would be interested for us to analyze, to value, and do this type of video for a company that you like. And if the company exists in the investment universe of Vinge, we're gonna show how to do that and in a practical way with Vinge GPT. With that, thanks for your attention and talk to you in the next one.